What is up, guys? This is the All Life back again with another cryptocurrency video. And today, guys, we're going to be talking about just some couple of day trading strategies that I use for day trading altcoins. Quick note, if you guys are new to the channel, definitely hit that subscribe button for more cryptocurrency videos, and let's get started. So currently, guys, we're looking at Stratus for an example. I'm just going to show you guys a couple ways to day trade altcoins, different points of view, different strategies, just so you guys can kind of find your strategy for day trading cryptocurrencies out there if you guys are interested in that. So, right here, currently on CoinMarketCap, I'm going to use Stratus as an example because it has some pretty decent buying volume for today. Market cap around $2 billion and currently trading at around $21. So I'm going to dive deep into the technical analysis here on the trading view at the moment. So typically what I want to do for a day trading coin is, I'll check the day chart first. So this is what I typically do. I'm just going to run you guys, walk you guys through some of the quick things that I do when I'm looking for some day trading possibilities. So at the moment here, we'll zoom out to the day chart. And what I typically look for on the day chart is I want to see if the RSI is over 75, close to the 80 to 85 range, and then that's going to indicate to me that it might be too high to buy in, because you never want to chase the FOMO. You never want to buy too high, or when it's almost when it's breaking a new high from the previous month or two. So you definitely want to look for a trending up RSI here. So as you can see here on the daily, RSI is trending upwards on the daily, so that means the trend is still at an uptrend at the moment. RSI currently is at 67, so there's definitely still room to grow. You definitely don't want to purchase coins, as you can see here, that are around the 85, typically about 80 or higher RSI, because then you're most likely going to purchase it at an all-time high or previous high, and then you'll buy too high and definitely lose that trade at the moment. So you always want to look for coins that are still increasing in RSI, so then there's some potential to grow. And then what I typically do is I want to see here on the day chart, what are my resistance levels, my previous resistance levels, so that I use those as targets. So as you can see here, we have a resistance level here at around 100 and around 165 satoshis there, and then we have this higher resistance level there, right there at around 230,000 satoshis there. So those are my two targets there. Will it hit both of them? Usually not, because you're gonna have to. You might hit target one here, and then you'll have a correction over a couple weeks, and then it'll retest that second target there in the near future. So, but that's more for swing trading. But I just want to talk about day trading at the moment. And typically, what I do is I see my target here. Target one is around 160, around that range. So that's what I'm going to use as my potential target for profit there at the current price at the moment. So we'll dive deep into a different couple different strategies here. So I'll go on the 15-minute time frame here, zoom in really quick so it'll be easier for you guys to see, because I just want to go through different kind of styles that people use to day trade, and then kind of show you why that if you use a combination of these, you can definitely trade with some profitability. So we'll start off here. So one style that a lot of people kind of use is they use the 50 EMA line as a support for the trend, and they'll typically buy when it touches the 50 EMA. So right here you could have purchased it. Let's see here. So you could have purchased it once there, a second time there, and then maybe the third time in this general region there. But it's a lot harder to day trade with that style, because it's you're most likely not going to purchase near the bottom, and that's more of a this is more of maybe a swing trading type of play for those that don't want to stare at the screen all day. So they'll typically trade this 50 EMA until the trend is reversed. So the trend would be reversed right here where it crosses it, and then they would put a stop loss somewhere in that region, or not a stop loss, but they'll sell as it crosses over, because they usually indicates a downtrend. But this one definitely consolidated sideways there, and then crossed over again. So now it's currently in an uptrend. So that's just one method there, for swing trading and day trading that people typically use. And then we'll dive deep here into the 5-minute time frame, so it's a little easier to see the spread here. So So for example here, okay, we'll zoom out one really quickly. Let's see here. That 1 hour is too big. Maybe 30 minutes. Okay, so currently here on the 30-minute time frame. Right now you're gonna have like a rough Elliott wave here, so you're gonna have 1, 2, 3, 4, and then 5. And when you have that 1, 2, 3, 4, 5, you usually have an ABC. So this is just another method that some traders use. Their Elliott wave traders and Fibonacci traders out there. So they'll see the ABC correction there, and then they'll see right here that there's another wave here. So they'll start the 1, 2, 3, 4, 5 count there. So right here, you have your wave 1, and then wave 2, and then 3, 4, 5, etc. But typically you can't calculate wave 3 until you know where the wave 2 ended there. So usually what you want to do here, I'll delete some of this so it's a little easier to see. Zoom in a little bit. So typically what you want to look for here on these where to project wave 3 in this scenario is you want to use the Fibonacci retracement here, and you take the bottom of the start of the wave and you go to the highest part of the wave. So typically you want to trade it around the 618 Fibonacci. So I don't know if you guys can see it here. The 618 roughly goes around 139, so you're going to have that's going to be your buy zone there at 139 on the 618 Fibonacci retracement, aka the golden ratio there. So once you know wave 1, then you use your Fibonacci retracement. You purchase it roughly around the 618 range because that's a safe measure, and then you would put a stop loss under it just in case it were to fall through. But number one rule for an Elliott wave count is that when you have a wave 1, wave 2 can't pass the start of wave 1. So then that's not a true Elliott wave count. So once that passes through, then the Elliott wave is no longer valid. So then you'd have to wait until you see another start of another wave. So this is another method of trading that people will typically use. You can definitely use this on the larger scale for swing trades, but you can also use it in intraday for day trades there. So you have the Elliott wave count there, and then what you typically do is once you know the distance for wave 2, you can get a rough estimate for wave 3. So you'll take the Fibonacci retracement from 1 to 2, and you'll see that roughly wave 3 falls in between the 168 and the 2618 range. So I have a rough estimate there. Roughly currently telling me it's around the 155,000 satoshis. Then usually wave 4 will fall just above wave 1, and then wave 5 will be in that general direction. But you have to know the distance of wave 4 to calculate wave 5 for a rough estimate. But we do not know those targets at the moment. So currently here we're waiting for wave 2 to wave 3. If this Elliott wave holds, so that's another method that people will use for day trading. So basically, when they're day trading, they're going to be looking at their potential profits here. So you have this potential profit here from wave 2 to wave 3 of approximately 10%. That's going to be their target range there if this holds true. You also have to keep in mind that there's a support level here. As you can see here, it's the price has kind of stayed in this 137 range, thousand Satoshi range here. So you're going to most likely want to put a stop loss right under here, because then if the price were to fall under that, then the trend has changed and you have to trade accordingly. So that's how people would typically trade this. So if an Elliott wave trader would see this pattern, they're going to buy it here on the 618 fib and then set their sell somewhere around here on the wave 3 because it's usually going to correct. So that's going to be how an Elliott wave trader would kind of day trade this. Now we'll take a different approach on this, where someone usually doesn't trade the Elliott wave trading style, and then we'll go just from purely a pattern recognition style here. So right here you can see a cup formation forming at the moment. So you have your cup here, and then you have your handle. So typically you have a cup and handle breakout. This pattern has this resistance level here at roughly the top of the cup. So right there you have this target here at 147,000 satoshis. You see the cup formation, handle formation, Usually when you see a cup and handle formation, the handle doesn't fall from the base of the cup roughly, you know, 0.382, so around the 142 Satoshi. So this one's a little lower there. Maybe you'd always want to use the golden ratio here for the handle, but in most cases it doesn't. So then you would purchase it around this area, and then you would trade the gap up to the cup, the top of the cup. So yeah, tool. So yeah, you would trade the gap up until the top of the cup if you guys are more conservative. So that's around a 4% gain. For those that are more risky, you want to trade the breakout. Sometimes it could be a false breakout where the handle doesn't quite go through the top, and then it bounces. So then you're trading a false breakout, and then you essentially you might break even or make a 1% trade there. So it just depends on the trader on that particular scenario. But that's what a trader that uses kind of breakout patterns would do. They would see a cup formation, they'd see a handle, and then they'd see a potential breakout. So then when you're trading this, you're like, all right, an Elliott wave trader can see the wave 1-2 correction. He's looking for wave 3. Pattern recognition trader from a breakout standpoint sees the cup, sees the handle. All right, okay, so this is potential cup and handle breakout. And then when a cup and handle breakouts, it typically breaks out in the height of the cup. So right here you have the depth of the cup, and then you take that and place it on top of the cup, and that's usually your target when it breaks out before a correction. So right there, you have your second target there at 160. So a cup and handle breakout trader is going to say, okay, if I purchase it here at 140, I have this maximum estimated projection of around 14% gain. So that's going to be how a breakout trader sees that particular trade at the moment. That's just one scenario for breakout patterns there when you're trading stratus here at the moment. And then you have people that trade intraday on like the smaller time frames from 5 minute to 1 minute, which is a lot more risky, a lot more stressful. So I don't usually trade that, but there are people that do that. And then I can kind of talk about that here really quick. Let me see if I can zoom in. Zoom out a little bit. So typically, when you're trading such a small time frame here, you're going to be looking for different indicators that will help you establish, close to the bottom, because you always want to buy low, sell high. So right here, some people will definitely trade using just the RSI. So they'll purchase it when the RSI is around roughly 30 or lower. So if you buy it here 30, and then you can set your projected profits. So typically when you do this, you're not going to get much, so like 1%, 1.5%, 2% swings, because it's very this is a small time frame there. So you can purchase it here, kind of okay. So right here you have 30 RSI. You buy there, you sell 1%, 2% profit. You buy here on their indicator, you sell accordingly. You sell up to the risk tolerance that you can deal with, and the profit projections that you're willing to take for this trade. Always set your potential targets, because you don't want to get greedy, guys, and then where the stock runs, you don't sell, and then it falls back lower than the price you purchase it, because I've been there before. You don't want that to happen. So someone would purchase it here, RSI is low, you zoom back here, try to go back down this chart here. It's probably hard to see. So yeah, so some traders would purchase it when the RSI is very low, and then some traders here, they use stochastic, which is essentially momentum. They would purchase it when the momentum is low. So right here, you'd purchase it here, you would purchase it there. You would also purchase it here, and you would sell accordingly based on the profits. You would sell when the momentum gets high. Same thing with RSI. You would purchase it when it's a low RSI, and then you would sell when the RSI gets close to overbought. So then that's one way another trader would trade these little 5-minute swings here, if they're more of that extreme day traders. And then you have traders that trade the MACD crossovers. So as you can see here, when you're on the top part of the MACD, you would sell when you have a crossover here. So you would sell there on the MACD, and then when you have a crossover on the bottom, because typically the MACD uses the 12 and 26 moving average, and when they cross, that's usually a buy or a sell. So right here on the bottom, you would purchase when it crosses over here on the bottom. Same thing over here on the bottom, and then you would sell when it crosses over the top. Some people like to use it. I typically don't, because it's kind of it's usually behind in the price, so you'll get it near the low, but not as close as you could using stochastics or RSI. So, but that's just one way that other people trade. So I just wanted to show you guys a couple of different ways that some people, day trade altcoins, so that you guys can understand the psychology behind certain trends and why it moves in that particular direction. Because everyone sees the same thing. It's just some people see it in patterns, some people see it in Elliott waves, some people see it in Fibonacci retracements, some people see it as trends or like trend reversals. Some people see it as stochastic momentum, RSI, oversold, overbought, MACD crossovers. So I just wanted to show you guys just a couple of different styles of day trading that people will typically use uh, to day trade in altcoin, and then also make sure that you're managing your risk. You want to calculate your perfect risk to reward ratio. Definitely set your stop losses so that you don't over analyze a trade and then you predicted it as a losing trade, and then you lose a lot of money because you're not paying attention to the screen at the time. So that's going to be it for the video. Just wanted to show you guys a couple strategies that a bunch of people use in day trading. Hopefully this kind of helps open up your point of view on day trading. If you guys are new to the channel, definitely hit that subscribe button, and I'll see you guys in the next one.